Sprint hoping to sprint to the finish line with Clearwire. Let's talk to John Marino of Reuters PE Hub. All right, Sprint and Clearwire. Sprint wants the whole pie. They want the whole thing. They offered $2.1 billion, $2.90 a share. What do you think?
I think it sounds like an okay deal. Some shareholders don't exactly think so. You're seeing, I guess, some folks trying to bubble up and maybe try and bring in a bid from elsewhere. Sprint's being pretty aggressive here. They're talking to shareholders outside of their small little minority group who appears to oppose the deal. They want to get even more than their 50% stake. At the end of the day, this is about selling phones. And when you add in Clearwire into the SoftBank network, it's going to make it that much more of a powerful company once they've completed acquiring Sprint.
That's right. SoftBank, as you mentioned, that deal's still pending of them taking over Sprint, and clearly they want this deal to go through with Clearwire.
I think it was probably a pretty big reason that they acquired Sprint, because they would also have opportunity to access greater bandwidth with a second deal down the road, kind of.
Interesting. All right, well, Clearwire stock up 12.5% at the moment.
Will it keep the shareholders happy?
All right,
Is it
John,
enough?
Is it enough? John Marino, stay put. We're going to come back to you in just a moment. I'm going to move to the hotspot. As I do, remember, check out the snaps, bottom of the screen, for more headlines of the day. And now I'm joined by Christopher Swan of Reuters Breaking Views, a columnist there. We're going to talk about Solar City on the NASDAQ today, day one, trading at SCTY. They're up 36% right now.
Well, it's a very good start, and it shows that they were right to cut back their ambitions. They had hoped for about 40% more. And obviously they wanted this first day push, and they've got it.
Actually, and climbing, as in my ear, I've just heard from my producer, Havovi, that they're up 40% at the moment. So a hot company, a good business model here where they lease the solar panels instead of making you buy them.
So there's no upfront cost here, and I think they're getting, probably the reason the valuation is nice and rich is they've got Elon Musk, who's obviously one of America's most famous and perhaps overexposed business leaders, the guy behind Tesla and a space exploration company, PayPal.
Yeah.
So I think that's part of the reason they're getting such a good valuation. Personally, I think it's a little richly valued at this level.
You do? Okay.
Part of the reason for that, obviously, is that they're trading on a much higher multiple than comparable companies. And obviously they're in the right part of the energy business here, that they're not actually making solar panels, which is a horrific business.
Where there's such a glut right now of the panels.
There's an immense glut, so at least they're getting a lift from that. On the downside, however, it's a rather convoluted business model because you have all these intermediaries. So the installation will be financed by a company like Google, for example, or US Bancorp. And then so there's always an intermediary in the way. That makes everything rather complicated.
Interesting. All right. Well, we'll be watching that as it continues to climb. Christopher Swan, thank you so much.
Thank you.
I'm going to head back to the Market Monitor, and I'm rejoined by John Marino. I missed you, John. How are you?
I'm doing all right, thanks.
All right, good. Let's talk some tech now. And Amazon, in their conquest to take over the world, they've got some good news overseas. They're opening really a Kindle e-book store in China.
I have a really interesting theory on why the Kindle is going to thrive in markets like China.
Okay, hit us.
They don't have the same development of data infrastructure that we have in the U.S. That makes it a lot more difficult to operate an iPad at the same speed that we're used to here, that we really like.
Interesting.
So a Kindle, which won't eat as much data, can potentially save its users a little bit more in terms of their user experience.
Right. So this is for the Kindle app right now, but they hope to actually introduce the Kindle itself, and I think something like maybe 2 years.
Well, I think that they should probably go ahead and do it even a little bit sooner. Obviously, Kindle sales won't keep up with, something like Nexus. The iPad is another pretty good example. If you're going to go a little bit down market, the place to go is China, probably.
All right, Jeff Bezos, listen to John Marino. Do it sooner than 2 years, he says. Okay, elsewhere overseas in the EU, this is a victory for Amazon because a ruling there that really Apple can't collaborate with 4 major publishers in terms of price setting to try to undercut and prevent anybody else like Amazon from coming in and setting a lower price. So good news for Amazon there.
Great news for Amazon. Obviously, they're going to be selling less and less actual print books as the world buys more and more digital ones. This is also really big for them because they need to be partnering up with these publishers and they're trying to get a little bit of exclusivity and, individual titles going out maybe first or cheaper. Cheaper would be pretty important.
Right. So free market will rule, at least in the short term there.
Absolutely.
Okay. Let's move on to Google Maps. 2 years, a firing of Scott Forstall over at Apple. Lots of folks getting lost trying to use the Apple app, Google Maps app, back on the iPhone.
We've seen, I guess, a lot of folks giving Apple bad press for the map disaster now.
Right.
But the biggest problem that they're going to have isn't going to be their bad press. It's going to be the revenue hit that they wind up taking because Google's going to make that much more money because of how many iPhone users there are. That hurts.
That hurts. All right. And finally, We haven't talked about him in, a few days, a couple weeks even, maybe. Richard Scholl's.
He's back.
Over at Best Buy. There he is. Mustache is still on, at least in this photo that we're using. He is making it, he says, actually it's out of the Minneapolis Star-Tribune reporting that he's going to be making a bid well below the numbers that were originally floated about.
Shareholders are going to have to take a haircut. His mustache needs to take a haircut. And it seems like shareholders could be taking an even bigger haircut if the deal doesn't get done. I mean, taking into consideration that, A, we're approaching the so-called fiscal cliff.
Right. If
the market starts to get a little bit wobbly, it seems like financing could kind of evaporate for a deal like this. It certainly has happened often enough to private equity firms in bad times. On top of that, holiday sales figures. If things don't pan out and the deal doesn't get done, it's not going to look good.
Right. I mean, there's going back to Amazon. They were price matching the prices that you saw on Amazon. But yeah, he's right now, the bid is supposedly $5 to $6 billion, and that's well below. It was floated about $24 to $26 a share before. That's well below that. Nevertheless, stock getting a bump today. They're up 15%.
Good news for now.
Good news for now. John Marino, thank you so much. Remember, folks, follow us on Twitter at Reuters Insider. Check out our YouTube channel as well, Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.